probably need to log out of. Okay. Welcome back to Lunch of the Market. What a day to wake up to. Our long weekend, which was extremely nice, has turned into a nightmare with the averages down quite a bit. All averages are down over 1%, and the NASDAQ is actually down over 2% today. But have no fear, Magnum Opus Financial is here. Now, if your portfolio looks like ours, then you already have long S&P 500, 1300, 1275 put spreads for May, and you've also got May 1721 call spreads on the VIX. We appreciate the shout out. This morning somebody let us know that they made enough money on their VIX call spreads that we actually paid their mortgage for 2 months. That's fantastic. We've also got callers on everything from Apple, Chesapeake, Intel to NVIDIA, Weatherford, and the IYR, which is the Dow Jones Real Estate, the REIT index. We're protection all over the place. As you know, we are mainly short put spreads here at Magnum Opus Financial, so with last Friday being options expiration, we also came into this morning with a boatload of cash ready to take advantage of what inevitably was going to come. And it looks like over the weekend with all the fighting in Libya, we got it. Now, remember that a caller is made up of a long stock position with a short call above it and a long put beneath it. In the case of Apple, we're short the July 370 call and long the 355 put. That put is now in the money by 15 bucks. So to multiply the profits in Apple, we also braced ourselves for the permanent departure of Steve Jobs by being long the 350, 300, 275 put butterfly. So we're long the 350 put, short the 300 put, and then long the 275 below it. So it looks like a 1-2-1, where this strike right here in the middle on the put butterfly is used for both the long put spread and the short put spread at the same time. Okay? So long 1, short 2, long 1. That's how the structure works on a put butterfly. The trade is already up significantly from last week, and we appreciate @LDEM letting us know that they sold half of their position, their long stock in Apple on Thursday, and they put puts, 360 puts under the rest of them. Thank gosh, because they can now hit the red button and eject out of that position with no loss whatsoever, except for the cost of whatever the cost was of buying the puts. For us, our structure is all the way out to July, so we're probably going to wait around and see what happens, because while there's tons of selling today and some of it's probably related to rumors on Jobs' health, what we haven't seen yet is an official announcement that Jobs is in terrible shape regarding his health, or that he's just stepping down from the company as CEO permanently. We expect one or both of those things to happen between here and July, and so we're going to keep that position on. Now, we will not sell spreads on Apple between here and either the permanent departure of Steve Jobs from Apple or from Earth. Okay? I know that's a terrible way to think about it, but the reality is that this is real money at risk, and it is our job to protect those people that we trade for and you, our viewers. So be careful with Apple out there. We are not recommending selling any short put spreads on this trade until we see some resolution of the Steve Jobs situation. Until then, we're going to have bearish bets. Now, upon the departure of Steve Jobs, either from this earth or from the company, we will aggressively look to take advantage of what will inevitably be a stupid price in Apple stock. The story for Apple is still intact, but what's really important right now is that, you know what, stocks don't trade on fundamentals at all times, and there's many times when the stock separates from the fundamentals. So we appreciate those who were able to take advantage of their advice. Thanks so much for writing in. It makes it all the easier to do our job here at Magnum Opus Financial. We're glad you got a lot out of it. Now, somebody asked, how do you find us on stockpicker.com? So they actually created a page specifically for us, which you can find at stockpicker.com/lunch-market. Okay, so stockpicker.com/lunch-market. We'll also put a link straight to that right on magnumopusfinancial.com. Look for it right above America's Favorite Traders. That'll be coming up in the next few days. And as always, for the most recent article that gets published on stockpicker.com, you can check out our Facebook page, and then we'll put those links every time they come out. All right? Now, speaking of put butterflies, like we did on Apple and on Netflix and Amazon before they reported, Kramer's Fats canned stocks are wonderful stocks, but that doesn't mean we won't see massive price movement in these stocks. F5 and Amazon got whacked. In fact, now sometimes traders call it they got F5'd, right? Means the company reported and then gapped down huge the next morning. Netflix and Chipotle Mexican Grill soared the other way. A put butterfly is a perfect trade for both of those situations. So here's what we're doing. Deckers and Salesforce.com, that's Deck, D-E-C-K, and CRM for Salesforce.com, both report on Thursday. We want to be in there protected ahead of those. So we've got the 135, 130, 125 put butterfly for Salesforce.com. Long the 135 put, short the 130 against it, and then long the 125 against that. Remember, this is twice as many as this, or it's equal amount of this and this. Does that make sense? Look, here's a long put spread. Here's a short put spread. You just use this at the pivot point for both spreads. So it's double either side of the spread or equal to both sides of the spread. Okay? Mention us if you have a question, or leave comments in the video on YouTube and we'll get back to you. But it's trying to get comfortable with this, and we're going to have a book coming out later this year that will detail how to do these strategies. We'll have some graphs and charts and things like that. So be on the lookout for that later on this year. And until then, we're going to have to use our finger charts. All right, same thing in Deck, but this time it's long the 85, short the 80, long the 75. So 85 long put spread, 80, 75 short put spread in Deckers. And both of those are for March because they report on Thursday, and we really just want to take them off. The ideal situation is the stock plummets. It doesn't breach the point where we're short, which is 80 on Deckers and 120, I believe, on Salesforce.com. Okay, but we want to see the stock breach through that long put on the top, go all the way down to where we're short. Then we're going to take the top side off, and then of course we're left with just a short put spread, which is, we do that all the time over here. So we manage those by rolling down and out if for some reason those get breached. Even if those get breached, it's no big deal. You roll those puppies down and out. You resell some put spreads below, right? Below the trade, below where the stock stops. Because usually that first day is the worst of it, and then they trade up from there. Take a look at a chart of F5 to kind of go back and back test or see how you should trade one of these. F5 is a perfect example of the panic in the first day. You sell those spreads ahead of time. If you had spreads there on and it got breached, you roll those out to a next month. You deal with those later. Ideally, you roll them down and out, okay? And then you take that top half, right? Should go to $5 or close to $5. We're kind of a ways away from March expiration, so you probably have to settle for 100% or 200% rate of return. Both of these spreads were done somewhere between 50 and 60 cents. 50 and 60 cents, less than $1. There's a very high probability that those stocks will sell off on Thursday, and if they do, that 60 cents will turn into $1.20 or $2.20 or $3.20 if we're really lucky. So we'll see how it turns out, but we will look to take those off very quickly. We're not looking for full profit on those, just a nice rate of return, and then we're going to manage the bottom side of those. Okay, we did sell F5 and Netflix put spreads today. You go down as far as you can and still get $1 for the put spread. Stick to a $5 wide spread if you can. If you want to go way out of the money, you can go $10 wide spread and take in enough credit. Just make sure you get $1 for that spread. Otherwise, you're really not being compensated for the risk that you're taking on. We're not going in full blow and putting on all our positions right now because there's a good chance that the selling today could last all week until we hit March in the calendar. Because typically February is historically weak anyway, and people have been looking for a reason to have a sell-off for months now. So this could be the start of it. Who knows? We're being extremely judicious in the trades that we lay out, and we'd like you to do the same. Okay? So be careful out there. F5 and Netflix, go down as far as you can, still get $1 for the spread. Only go $10 wide if you're just way out of the money, okay? Like if you can get below, say 70 on Deckers and do a $10 wide spread, or if you can get below, if you can get below 100 on Salesforce.com, by all means do a $10 spread. So those are about where we're thinking about, okay? So be careful out there. Those who took the opportunity to follow us and hedge and protect and take off positions last week, you guys are fine. You're in terrific shape to take advantage of this opportunity. We are not really buyers of much right here. We don't mind laying out a couple of short put spreads, but most of what we want to do today is put on those terrific hedges that we like, the put butterflies in Deckers and Salesforce.com ahead of earnings on Thursday. Thanks for joining us again today on Lunch of the Market. Quick note on Walmart. Don't be involved in the stock. There's no reason to own Walmart. Seriously, if you need more details, go check out any of the past episodes of Lunch of the Market by searching for MO Financial and WMT, the ticker symbol, on YouTube. Bring up those videos. All right, have a great day out there. Be careful. Check out the Facebook page for the latest editions of Lunch of the Market, the print editions from stockpicker.com. Have a great day, and we'll see you tomorrow.